But Africa's economy is experiencing its weakest growth in nearly 2 decades. The International Monetary Fund is urging African nations to cut deficits as growth slows down. Viewers, Carolyn has more.
The International Monetary Fund is advising African exporters of oil and commodities to remove subsidies and boost taxes to weather the slowest growth in more than 2 decades. The Washington-based fund cut its 2016 forecast for sub-Saharan Africa by more than half, to 1.4%, from an initial forecast of 3%, as economies from Nigeria to Zambia reel from the drop in commodities prices. The director of IMF's Africa Department, Abibi Selassie, says growth could recover next year to 3%, but only if fiscal reforms are put in place.
You know, the key for us really is, the key risk is really whether or not countries will go ahead and do the required fiscal adjustment. Should they fail to do that, I fear vulnerabilities will heighten, and the crisis and the weak economic performance we've seen so far could get even more difficult.
Economies grew more than 5% in the decade leading to the commodity price drop, but it is now being crushed by 23 resource-dependent nations like Nigeria, South Africa, and Angola. The average growth of African nations was 3% last year. More diversified countries like Rwanda and Senegal will continue to grow at more than 5%. Nigeria, which is in its first recession in 20 years, is seeking to widen its tax base to offset lower revenues caused by the slump in oil prices. Selassie says the low debt would make recovery easier.
Now, the good thing for Nigeria is they have fairly low level of debt. So Nigeria is a country where if you have a coherent and consistent policy package, it should be possible for them to to get financing to support a gradual and smoother adjustment path. So the low level of debt in Nigeria is a source of strength.
Kenya has a broad-based economy that is still growing at 6%. It is justified in expanding its fiscal deficit to invest in roads, power plants, and other infrastructure. The East African nation plans to trim a budget deficit, possibly by a second Eurobond issue.
Kenya, the growth has been good over the last several years, and this year also it looks to be holding up well, but it's been accompanied by rising fiscal deficits. Now, because this deficit increase is being driven by an effort to address investment needs, infrastructure investment in particular, this is justifiable.
Selassie said African nations need to balance commercial debt like Eurobonds with other cheaper forms of financing. Carolyn, VOA News, Washington.